put the dollar in terms of grams of gold, and it's lost 99% of its value. But that last 1% is still quite, yeah, it's quite significant. And I think it could end up being like in third world countries where you have new currencies been issued and zeros taken off, and then backing that currency by the dollar. But in the case of the dollar, you can't, if the dollar, people don't have confidence in the dollar, you have to back it with something that people have confidence. And usually that's gold.
For decades, the US dollar has held a privileged position as the world's dominant reserve currency, affording the United States significant financial advantages. Recently, financial markets have reflected these anxieties, with stocks, bond yields, and the dollar all trending lower, while gold has surged higher. After a brief and relatively shallow correction that failed to breach key support levels, gold has resumed its upward trajectory, now trading above $2,900, with traders again eyeing the psychologically significant $3,000 level. MarioInnecco acknowledges that the decline of the dollar as the world's reserve currency is not an overnight event, but a gradual process through which gold reasserts itself as the premier Tier 1 monetary asset. He compares the situation to currency crises in developing nations, where failing currencies are redenominated, zeros are removed, and new currencies are often pegged to the dollar. However, in the case of the dollar itself, if confidence erodes, it would need to be backed by an asset that retains intrinsic trust, and historically, that asset has always been gold. Central banks have purchased over 1,000 tons of gold for the third consecutive year, with total annual demand reaching 1,045 tons. The primary driver behind this surge in gold accumulation has been a global shift away from the US dollar as several regions seek alternatives to dollar dependence. While this transition has been bullish for gold, analysts note that neither the Chinese yuan nor the Indian rupee is prepared to assume the role of a global reserve currency. Meanwhile, gold supply also hit a record high in 2024, rising 1% year-on-year to 4,794 tons, fueled by increased mine production and higher recycling activity. MarioInnecco argues that the past 50-plus years of a purely fiat-based global reserve currency represent a historical anomaly. While he does not anticipate a return to gold coins being used in everyday transactions, he firmly believes that gold will ultimately replace U.S. Treasuries as the primary reserve asset held by central banks. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
Well, I think we're pretty near a point where people might lose confidence in the dollar. If you look at like the dollar since 1953, for example, I've looked at a website called FX Top, and you can put the dollar in terms of grams of gold, and it's lost 99% of its value. But that last 1% is still quite, yeah, it's quite significant. And I think it could end up being like in third world countries where you have new currencies been issued and zeros taken off, and then backing that currency by the dollar. But in the case of the dollar, you can't, if the dollar, people don't have confidence in the dollar, you have to back it with something that people have confidence. And usually that's gold. The 50 plus years we've had of fiat currency being a reserve currency for the world is an aberration. And it doesn't mean to say gold is going to come back in coins and people are going to use gold as coins, but it will, I think it will be, again, instead of treasuries and treasury bills, it will be the reserve asset that countries will hold mostly. And yeah, and that's why I think a lot of countries have been buying loads of gold since 2022. And maybe that's why a lot of physical gold is flowing back to the US because they know what's coming. And the bond market was in the bull market from 1981 till 2020, about 40 years. And prior to that, from 1981 to 1941, bonds were in a bear market. So there seems to be a 40-year cycle. And when bonds go down, that means the cost of credit goes up and financial assets become harder and harder to carry because you can't roll over and for cheaper, uh, like uh, like we've seen the everything bubble. So I've been warning about this. Maybe I was a little early, 2019, but I saw that in 2020 there was a crash of all assets. Even treasuries were really uh, very volatile in March of 2020. And the CRB index, the Commodities Research Bureau index, crashed. Gold dipped really quickly from 1750 to 1450. I think silver went down to $12, but they rebounded really quickly. And silver went to $30 still in 2020, and gold went almost, I think, went to close to 2000 by the summer of 2020. And commodities, the general commodities, only started making a move a little later. Um, yeah, they topped in 2022. So now, looking at the technical picture, it looks like gold is leading the way, and commodities could, I think they're just catching up. And that's why, as well, I think we are in an age of hard assets. The fact that Trump is also bringing out this policy of tariffs uh, is very significant because he wants to take America back to a time when they used to make things and export things and have an industry. The bull market in bonds has been abused in that it financialized the whole U.S. economy. The only sectors that have done well uh, are on Wall Street: private equity, fund managers, hedge funds, and politicians. So I think the balance is gonna, yeah, it's gonna shift. Things like that don't last forever. I believe in cycles.
The United States holds the largest gold reserves in the world, yet its official valuation has remained unchanged at $42 per ounce since 1973. If revalued to reflect current market prices, the total worth of these reserves would surge from $11 billion to over $760 billion. Such a move could have significant implications for government finances, offering a potential avenue for debt reduction or even establishing a sovereign wealth fund. By adjusting the valuation, the government could sell some of its gold holdings or strengthen its balance sheet, creating new financial flexibility in an era of mounting fiscal pressures. While some officials, including Scott Bessent, have downplayed the possibility of a gold revaluation, Innecco argues that such dismissals are expected. No government would publicly announce plans for revaluation in advance. From a legal standpoint, adjusting the statutory price of gold in the U.S. would require congressional approval. However, Innecco does not view this as a significant obstacle given the potential economic and political benefits such a move could offer. Now, let's redirect our attention to a video.
Well, I like to go back in history a lot of times, as you probably know, and prior to 1973, there were a couple revaluations in the modern era. And by modern era, I mean the last 120 years. One was in 1934, January 30th. Roosevelt revalued gold from $20.67 to 35. And that was at the height of the Great Depression. The country was in crisis. And then if you skip forward to 1972, it was the same thing. The country was in trouble. Nixon had closed the gold window the previous year. The monetary system of the world was in chaos, and they raised the statutory price by about 10% to 38, and it didn't work. What it did, it created a floor under the gold international gold price, and gold just shot up, and they had to revalue it again in 1973. I think it was February to 42.22. And again, that put like a floor on the gold price. It's almost like the Treasury wrote a put to the market. And of course, gold went to almost $900 in 1980. And why haven't they done it since then? Well, because it's an admission of failure of the dollar system. And I think the current administration, though, seeing who's in charge of the Treasury, they're a bit more, they're admitting that things are not great, and they see the bricks going towards gold. And yeah, it will be an admission, like Taylor said, of a weaker dollar. And I think it will put a massive floor on the gold price, and we could see gold take off if they revalue it again. And yeah, that's how I see it. Definitely. And despite the fact that Scott Bessent mentioned the other day that he's not thinking of revaluation, you would say that if you were thinking of it. You're not going to tell the market, yeah, we're going to revalue. As far as whether it can be done, I think legally in the United States, you need a vote from Congress to change the statutory price. I don't think that would be difficult to get through because I think it would improve conditions for politicians. It would make the dollar weaker. They could keep spending. So I don't see that as a problem domestically. I guess, like Taylor said, if you're holding loads of paper promises or treasuries, uh, if the US were to revalue it to a really high level, it would annoy a lot of people because you'd be left holding the bag. And that's why I tell people they need to have physical gold because paper promises won't do.
The outlook for gold remains strong, as the recent shallow correction indicates sustained demand despite selling pressure from technical traders. Beyond its role as a diversification tool and safe haven asset, gold continues to gain support from central bank purchases and mounting concerns over fiscal debt. With the US dollar showing signs of weakening, another key resistance level for gold may soon give way. Additionally, the growing risk of an economic slowdown has increased expected Federal Reserve rate cuts this year, rising from just one in January to more than three. Given that the US dollar appears to be rolling over, do you think we are approaching a significant breakout for gold? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.